Just a few hours ago, Bitcoin started its crashing descent down to $20,396. And unfortunately, I truly believe that this is just the beginning. We have 3 different dates here, March 10th, March 14th and 15th, and March 22nd, that are going to determine whether or not Bitcoin recovers or finds a possible new bear market low. This video is going to be a little bit different than you're traditionally used to from this channel. Today I'm going to be talking more about fundamentals, and honestly, I'm not even going to go to the metrics today. I really just want to focus on these live charts because things are happening minute by minute right now. First up, the chart that we're looking at is Bitcoin USD on the 1-day time frame, and this blue line that you're seeing right here, I'm going to scroll out a little bit to make it a little more clear for you. That turquoise line is the 200 exponential moving average. Generally, when looking at big trends, if the price is below this, it's going to be a very bearish movement. And as you can see, as we pushed above it, we actually got some upward movement using it as structure support. But as of right now, as I said, we have absolutely crashed. Now, I know this is feeling like a really difficult time for a lot of our traders. I totally understand, and I'm so sorry about this. I will come out and say that this may not, I really hope this is the last of it. I hope we're starting to see bigger moves up soon. I think we're all kind of tired of this bear market, but I do want to come out and say, to be entirely honest, I think this could last a little bit longer than just this structure support. Again, $20,000, basically $400. So I just want to remind everyone, we're all in this together. We're at this point, if you've made it this far down, I mean, look at this. Let's go back to the weekly time frame here. If you were a trader that has outlasted this just gigantic crash in cryptocurrency, we're down at this point, what? Current price sitting at about 71% down from the all-time highs. If you have survived in this bear market, you are crushing it. I know it's been a long time. It could take, honestly, through 2023 before we see any sort of really big movements in the market. But I mean, we've made it this far. I truly think that at some point, as soon as the economy itself recovers, because most of what's going on is not really related to crypto, there is one big event that's causing this specific crash, but all of this is not crypto's fault. This is simply just macroeconomics, like the United States market, the world market, all of that is not doing great right now, and that's what's caused this overall downtrend. And personally, I truly do believe in the value of Bitcoin. I think blockchain technology is here to stay, and I can't say for certain every single coin's going to make it out and have a future in cryptocurrency, but the big ones like Bitcoin, I think personally are here to stay. So that's my opinion. That's just kind of the hope I want to give you. This isn't crypto's fault. This is just general economics going on. And I personally believe in crypto, and as the market recovers, as we see the S&P 500 recover more, as we see the rest of the economy recover more, I think Bitcoin is going to go on to make higher highs, even possibly breaking all-time highs back here. I think it's just inevitable. That's my personal opinion. Of course, it's not financial advice, but that's what I truly believe, and that's the mindset that I'm looking at. This right here may be a pretty significant drop at this point, and it could get worse. I don't want to sugarcoat that. It could definitely get worse. But overall, I think this is just going to be a small dip before we see much bigger runs in the market, before we finally get some real relief in the cryptocurrency space. With that, I want to talk about what's actually caused this crash right here. What's caused the price to drop so far in the last few days? Fed Chair Jerome Powell opens door to faster rate moves and a higher peak. In short, Jerome Powell, the Federal Reserve Chair, made it clear on Tuesday that the central bank is prepared to react to recent signs of economic strength by raising interest rates higher than previously expected, and if incoming data remains hot, potentially returning to a quicker pace of rate increases. Essentially, a number of recent economic reports have suggested that inflation did not weaken as much as expected last year and remained faster than expected in January, while other data showed hiring remained strong and consumer spending picked up at the start of the year. Overall, just really quickly here, the current goal for inflation is about 2% right now. It is much higher than that. In fact, currently the rate of inflation is at 6.4%. So we have a long way to move down before we hit that 2% goal. Fed officials projected in December that rates would rise to a peak of 5 to 5.25%, with a few penciling in slightly higher, 5.25 to 5.5%. Mr. Powell suggested that the peak rate would need to be adjusted by more than that without specifying how much more. He even opened the door to faster rate increases if incoming data, which include a jobs report on Friday and a fresh inflation report due next week, remain hot. Now, I will be talking about the jobs report and the fresh inflation report in just a minute. Those are a couple of dates you're going to want to pay attention to in the next few weeks through March. The next main reason that this crypto crash is actually happening is because the failure of Silvergate Bank. They actually went bankrupt and are in the process of voluntarily liquidating their assets. The problems that faced Silvergate were primarily a result of less than adequate risk management, notably one of relying too much on volatile short-term deposits while lending or investing at a longer duration. Now, I'm not going to read into this article, but this one right here, I left it in the description for you to check out. This is going to give a great explanation on what actually happened, the history of Silvergate, and what the red flags were, and why financial analysts actually missed them. Again, you can check this one out at the link in the description. It'll give you a great understanding of what's actually happening in the market right now. With that, you have the reasons for the current crash. Again, just to go over it quickly, Jerome Powell has become a lot more hawkish, saying that if the jobs data report right here that's coming out on March 10th is higher than expected, if we see up here from the CPI report that inflation is coming in hotter than expected, we've been hoping to see some decreases in inflation, but it's not coming as expected. So because of that, Jerome Powell is planning on this date, March 22nd, to possibly increase interest rates more than expected, which of course will create a drop in the market because this is not what investors were preparing themselves for. With that, you have essentially what's going on and when we need to be looking for prices to possibly drop further. And at this point, really the only thing to talk about is just where I think the market is going next. As a heads up too, I just want to be really transparent with everybody. As prices drop like crazy, instead of using the 1 day like we're on right now or the 4-hour time frame, when using indicators to trade, instead you're actually going to want to go to the 1 week time frame. This will give you a much more accurate picture. If this drops drastically and we see crazy moves in the market, that's going to give us a much better idea, a much clearer and honestly more accurate idea of whether or not the price is finished dropping. You can see right here, right when trend exhaustion was low, we saw price versus well money flow low here, and that correlated pretty much to the bottom of this area. Now, as the price has increased here, the trend exhaustion actually topped out, price versus well money flow topped out, and we're seeing this move down. So at this point, if we see whale money moving out of the market and the trend exhaustion moves down to its lower sections again, at least to the inner red one right here, that will likely indicate the bottom of this specific move. So again, just to repeat that, if you're using technical analysis to try and time this market, I highly recommend moving to a higher time frame. Not financial advice. I can't guarantee anything. Past performance does not predict any sort of future results. Always do your own research and all that kind of stuff. But this is what I'm going to be personally doing when predicting markets until this levels out again. I just want to throw out there really quickly, you can get all 11 of Trade Confidence indicators at the links in the description down below. You can actually get access to our membership too, up to $400 off right now on the indicators. Go ahead and check that out if you like. Again, links are in the description, but for now, I just want to hop straight into price predictions. As of right now, we're testing structure support at 20,396, and this is actually after previously breaking through $21,362. This was our main target for basically the past week. We actually crashed right through that overnight and into today. And again, testing that $20,400. This is the lowest we've been in a very long time, actually. This is, I mean, it's been several, on into early January, mid-January, actually. This is January 15th that I'm on. That's the last time that we saw this price, so it's been quite a while. However, it's been even longer since we've seen the next structure support at $18,384 right here. This was the absolute local top that we saw after the FTX collapse before this big run up. If we move back down to that price, again, we will be within the range of the FTX collapse. And a drop like that certainly is not impossible. Again, if jobs data comes out showing lower than expected unemployment, if the CPI data here comes out with inflation higher than expected, it will likely result on March 22nd a higher than expected interest rate hike, which could tank the market further. However, before we get to this point right here, the FOMC rate hike date, as these dates happen, we'll likely see adjustments to the prices of the stock market and cryptocurrency. And that's because, again, we can kind of expect what's going to happen at the FOMC rate hike and investors can adjust accordingly. Those are the prices that I'm looking at over the next couple of days. We'll have to readjust for tomorrow's video. If this candle is dropped further, I'll likely give new price predictions. But for now, it's either going to be the resistance up here to retest that at 21,362 or structure support way back down here towards the FTX collapse at 18,384. Those are the targets for now. This is going to be about 2 weeks before all of this plays out. We'll keep you updated in the meantime. With that, thanks so much for watching. If you enjoyed this video, please like and subscribe for more crypto content, education, and analysis. Trade safe, trade confident, and I'll see you in tomorrow's video.